If I had to summarize the office market for the first quarter 2012 with a single word, it would be stability. Looking 1 year backward, the total take-up for the Paris region, with 514,000 square meters this quarter, is actually down by 18%. But we must keep in mind that at Q1 2011 was counted one of the very large leasing transactions of the year, Thales for 80,000 square meters. Excluding this specific deal, the change over 1 year is only -6%. Now, if we compare the market activity with Q4 last year, the level of take-up is the same, and despite the economic and financial context, demand remained stable. This quarter, the take-up was specifically fueled by the large transaction segment with 16 deals above 5,000 square meters. In terms of geography, the winning markets were Paris 18, 19, 20, with the largest deal of the quarter signed by the Ministry of Justice for 32,000 square meters, and the Southern Loop with 3 big transactions. The immediate supply remains quasi-stable, with a minor drop of 1% since Q4 2011. The vacancy rate for the Paris region on average is at 6.8%, with strong geographical discrepancies. For instance, the vacancy in Paris is at 4.6% today, and the immediate supply dropped by 13% in 1 year. Prime rents, on average, tend to remain stable, with Paris CBD rising at 770 euros. In terms of forecast for this year, we maintain our initial appraisal with a take-up comprised between 2 and 2.1 million square meters. Stability again for the investment market, which achieved exactly the same figure than last year, with 1.34 billion euros. However, key market drivers are quite different this year. First noticeable change, the large transaction segment. When last year only one sale above 100 million euros took place, this year there were 5 of them. This demonstrates the depth of the Paris market and the capacity of investors to finance large acquisitions. Even though French investors dominated the first quarter, international players are there. 2 large office portfolios above 500 million euros each are under binding agreement with international investors. Second noticeable fact this quarter, the strong activity on the off-plan segment. 6 of them were sold this quarter, amounting to 1/3 of the total investment volumes. In terms of yields, the strong demand for prime products maintained prime yields stable this quarter. Despite strong investor appetite, the Paris market suffered a shortage of products during Q1. However, we have noticed a stronger activity from the sellers these recent weeks. This should allow for a better activity in the coming months and lead to a total investment volume for this year comprised between 8 and 10 billion euros.